almost like 50% more than that like Iron has. Okay, so here I would like to explain a little bit why the returns is higher, right? Because it basically adopts the same strategy. It requires, you see CVX, ETH, CRV, LP token. It requires the same underlying tokens here to invest in. And then it basically reinvest the farming fruits, which is CRV tokens and CVX tokens and some other trading yield, like 3 CRV tokens, back into not the LP token itself, but into CVX CRV, which is a curve token that has been deposited in Convex. And then they reinvest this, like this tokens into this concentrator compounding pool. So on the right side, right? So all the farm returns are turned back into this ACRV token with its underlying as CVX CRV. The CVX CRV are all deposited back into the Convex strategy, Convex protocol, to continuously compounding all the returns from the Convex protocol and reinvest into CVX CRV, right? And you are accruing ACRV tokens. Okay, so that's the first main difference, is that concentrator is different from Iron, is because it's reinvested your farming fruits back into CRV CVX tokens, which they use ACRV token as their own tokens to represent it. So that actually gives you high returns, because like for CRV token itself is actually getting 20%, right? So it is actually compounding not the LP token, but the CRV tokens, which CRV token, I believe, is definitely a blue chip tokens in the DeFi protocols. Okay, so that's kind of the first thing that I like to emphasize here. It's actually compounding different things, right? So Wire is actually farm and dump. It dump curve tokens and dump CVX token back to the LP tokens, right? But here, the concentrator is not trying to farm and dump, but its core principle is actually farm and hold the core assets that they believe, which will have a long-term value for all the investors in crypto, or more specifically in the DeFi sector. Okay, so CRV is one of the core assets that AladdinDAO pick for all its believers. Okay, and then they decided to compound their returns on the CRV itself, and CRV itself has a good returns in the Convex strategy, right? So that's how those play out. And here, the concentrator is actually, got itself reinvested as a more frequent basis than what Iron does. Iron probably now reinvest, the frequency is generally more than a month. However, like in the concentrator, it's basically everybody can call it, as long as they figure out the protocol gives them more rewards than the transaction cost they call to reinvest all the CRV that has been accumulated by the protocols. So the reinvestment frequency or the cycles is much shorter than what Iron is offering. Okay, so that's the first cool things that I'd like to emphasize, that why concentrator is offering higher returns, more rewards than Iron. Okay, that's the first thing. And the second thing is the fee structure. The fee structure you see here, like the Iron says its gross return is about like 42%, and the net is 34%, right? And the difference is because Iron is adopting a fee structure of 220, right, which is 2% of your principals annually and 20% of the performance fee. It's basically a hedge fund structure that you usually see in the traditional finance industry. Okay, so that's why you get your 8% return taken out. Okay, so that's pretty, that's pretty.
Sorry. My apologies, forgiven. I think I'm just going to pull up the IFO vault version of this, the one that actually earns the A curve right now.
Oh,
So
okay,
the problem. I mean, it doesn't. Maybe that's actually misleading to do, because the issue here is like the IFO vault, which is earning CTR, so this APY also factors the
Yeah, the
CTR
CTR
price.
is also backed by the CTR like premiums. I'll explain that in the third reason, of course.
Okay.
Yeah,
Okay,
because
sorry about that.
and
Go ahead.
also because if you use like, because it's in a like special period, right? If you use the regional vaults to compare, that doesn't yeah, because like the strategy I believe for has, because the pool there is much smaller, so it's compounding, the compounding effects is not that as big as it should be, right? So I'm using the return tier, but because I believe I think that when IFO hasn't started, uh the return is still like 50% higher, when at least I last check, right? And that's the reason for fee structure allow me to continue. The fee structure here for like concentrator is basically like there's a one-time withdrawal fee, and there's no management fee, and also for the performance fee, it's quite a quite flat fee that like I believe is ranging from 2 basis point to 10 basis points. Okay, and it will be level to a higher places, but nowhere compared to 20% of performance fee that YRM is charging. Okay, so that's the second reason. The fee structure is totally different. And the third reason why we have a boost here is because all the farming returns of the ACRV tokens now is exchanged to the protocol tokens, which while you are only where this benefits is only available during the IFO period, because all the ACRV, the protocol farms, will be automatically exchanged to the protocol's its own token, which is CTR, at a ratio of 1-to-1. Okay, and now the CTR is trading at a premium to the ACRV itself. I believe it's like 1.3, somewhere around 1.3, like 1 CTR to 1.3 ACRV at the current exchange rate. Okay. So that give you kind of the 3 layer of extra returns that you can enjoy for concentrator. Then you deposit your money at YRM. Okay, and people were wondering, okay, what if the farming period has ended? Will the returns drop back to what YRM levels? So given my previous experience, because I have participated in the concentrator protocol before the farming IFO started. So I believe for the most vaults, it's giving you a 50% higher returns than what YRM is offering. Okay, so we can cross track more pools. We can pick some random ones to compare across pools. Okay, maybe I believe like we can pick a random one. Okay, CVX CRV, probably we can choose this one. CVX CRV, and we can go back to what YRM is offering. Let's check it out. CVX CRV. Yep. Okay, it's 19, right? So here you go back to a concentrator where you are offering a 33%. That's definitely more than like 50%. Okay, so you can track more pairs if you want, but my basic points here is like there are 3 reasons that why, if you're looking for pure on a return basis, you should definitely move your farming LP tokens from YRM to concentrator. Okay, just 3 reasons I'd like to summarize here. The first one is definitely a more optimized structure, farm and hold instead of farm and dump. And second reason is definitely more flat fee structure than what a hedge fund fee that YRM is charging. And third thing is during this IFO period, that the CTR premium is that which is treated at a premium to like ACRV, is also another boost that you should definitely participate in this IFO stage. Okay, now I'm gonna stop here. for people who have questions about the product itself. If not, I will move to the next part of my today's presentation is the IFO itself. Okay, so anybody have questions about the concentrator product itself? Oh, by the way, I'd like to emphasize, like CRV is the first token that most of the DeFi brains, big brains in AladdinDAO that believe is a long-term valuable DeFi tokens that people that we believe is a good pick for the DeFi investors. Okay, and in the future, this CRV vaults can be expanded into other tokens as well. Let's say, but I mean that's not the decision yet. Okay, let's say in the future, you if you think synthetic token SNX token is a good DeFi tokens which generate external economic values, we can put SNX there and put SNX staking, integrate SNX staking back into this compounding vault. Or let's say if you think Frax token is a good DeFi tokens which actually can generate revenues from it's like farming of all the USDCs that they have been absorbed into their protocols. So Frax token itself can be a kind of a compounding target here, right? And in the future, I believe you can choose one of them, or you can decide to allocate your farming fruits across the allocation of different DeFi tokens you would like to reinvest and continuously hold long term. Okay, so that's kind of the expandable part of the product itself. Okay, and the other part that the concentrator could expand is a curved convex system is probably the first mature farming system that concentrator is focusing on. But in the future, any DeFi protocols that, as long as they have a revenue systems, right, that they can continuously to generate, it doesn't matter. It's like protocol token yields or external token yields that our concentrator could reinvest into the tokens, the underlying tokens that people would like to hold for long term. Those strategies could be added to concentrator as well. So basically, is a kind of an innovative and optimized product, way better than what Wiren has offering so far. Okay. Any questions about product itself before I move to the IFO itself?
Yes, I have one questions.
Go ahead.
Yes, so I'm kind of interested about or wondering about which product is better option for me between STEs and CVXEs, because I currently hold a certain of the ETH, also the CVX tokens. Then the reason is the APY for the STEs is much lower than CVXEs. But at the same time, my concern is, the volatility and also the impermanent loss risk the CVX is, especially the volatility, because, I'm not thinking about long-term staking for this, product around 3 or 6 months, staking or depositing. Currently, that's what I'm thinking about. Then from that perspective, which one, in your opinion, which one's better for, staking at this moment?
Yes. So thanks for asking these questions, because there are so many pools that users can choose to deposit their money in, right? This really depends on your risk preference, right?
Right.
AladdinDAO, concentrators and Wiren, they offering such strategy options based on your risk preference, right? So like STETH pool is basically that your ETH maximum that you believe the long term for Ethereum, and you don't want to bear risks of impermanent loss of ETH against another DeFi tokens or other let's say Bitcoin tokens, right? So STETH, STETH, and against ETH pool is definitely the lowest risk pool that you can find here for holding ETH itself for the long term, right? Well, like the impermanent loss risk here is more, although there were some risk in terms of the Lido, like the ETH merge, like delay, all that stuff. But still, the impermanent loss for holding ETH itself is the lowest in STETH pool, right? But let's say on the other side, if you're positive on both convex and is itself, you don't mind like how the exchange ratio between convex and is itself change over time, then CVX ETH is definitely a much better choice for you, right? Because this definitely offers a much higher returns in terms of farming efficiency, right? So this really depends on your risk preference, and then you can also choose. Let's say if you decided to hold Bitcoin, Ether, and your stable coins, you can choose Trip Crypto too, right? And if you like Trip Crypto too, you can see in the under the STEs. That's kind of the three basic things that you have: Bitcoin, Ethereum, and stablecoins, right? And also you can choose pure stablecoin pools. We can scroll down, like for pure stablecoin pools. Scroll down, you have like Frax USDC. That's probably the highest one you can get. Oh no, here you got meme. Okay, meme is probably riskier. Even like it's the reputation stuff, right? Yeah. But like Frax USDC, you can think it's much safer, right? In terms of pure stable coins returns, you don't want to hold any crypto risk during this bear market, right? So it's a risk preference thing that people have to make their own choice. I mean, I'm a believer of like ETH and like Curve and Convex. So I'd like to definitely offer like LP pairs in these things. But if I have more ETH, because the ETH is probably a bigger holding of my portfolio, I will put my ETH into the extra ETH into the STETH pool. So that would be my choice.
I see. That makes sense. So, Matt, based on, which means that, basically, if you can support that, the bullish momentum, also the market fundamental between CVX and ETH, almost like a same level or similar level, to stake, CVX ETH tokens on a consolidator is kind of, beneficial option for us to get the higher APY than STE sports. What do you think? This is kind of my basic understanding. Yeah.
Yeah,
this
is good. Be aware of the convex risk itself, right? CVX is, to me, it's not as solid as other like blue chip DeFi tokens, that's so called, right? It has a much more drawdown than Ethereum, in this bear market that people can see it out. I don't know what market will head towards, so no suggestion here. DYOR, okay?
Right. Let's see. I was actually, one more additional questions. So when I actually, try to stake STEs on, car finance, I only, stake the STEs only, not a ETH on a car STEs ETH pair. Then at that moment, actually, I find out, slippage risk for that, like, the single, staking model hit the higher slippage, like 1.0% or something. Is that also related to, like, which means that, if I can, it's actually a better idea for us to stake ETH and STEs, same amounts on a car finance to get the, lower slippage risk, or to get the higher APY. It doesn't have any problem with it, or should I choose to stake same amount of ETH and STEs on car finance to deposit, this STE spot on a constant later?
It doesn't matter where you stake your STTH or ETH in concentrator on Curve, because the underlying the concentrator is built on top of Curve, right? It's a Lego.
Yeah.
So the slippage originates from Curve. It's not a problem of concentrator, and the slippage varies from time to time. It really depends on how people look at ETH merge, the risk preference for STDH, right? I mean, but
I see.
Generally speaking, I think the risk, the FUD of STTH has passed, right? It now it's traded about like 0.97 somewhere about that. But I mean, it went down to 0.9 not too long ago, right? When like 3 arrows on the wrong side of the trade and sales is wrong for the hill, right? So I guess risk is much lower now, but who knows? Okay.
I see. Fully understand. Really helpful. Thank you so much for giving.
Yeah, thanks
really
for the
appreciate
question.
it.
Yep.
Welcome.
Also a little question, if I may.
Okay, any more questions? If no more
Yeah.
questions, we'll go ahead.
Yeah.
Johnny, go ahead.
Okay, thanks. Any thoughts about integrating interest rate options in the future to hedge the rates or to execute more complex strategies?
So for option strategies, I know most of the popular option strategies is basically you depositing the underlyings of either the cryptos or the stable coins, right? For put options, you can like deposit stable coins and write put options to sell. And if you can, in the other side, you can deposit Bitcoins or Ethereum or even Curve tokens and to sell like call options, right? But such strategies is kind of collecting premiums when the strike price is not hit. If the strike price is hit, you are bearing the risk of losing principal itself, right? You're losing principles of stable coins, or you're losing the principles of ETH or Bitcoins, right? So that actually incur a bigger risk than what concentrator is offering right now, which that basically your LP tokens are mathematically it is safe, right? You're not losing your LP tokens. Well, there is fee, but you have no risk of losing your LP tokens, right? But for option strategies, there are risks that your principal is at risk when you're selling up of like options and option price. The strike price is triggered. Okay, so that's a kind of another layer of risk that people have to think about, and definitely the product itself will become a little bit more complex, right? Because generally people are like are suggested to choose the risk levels they would like to pick on the strike itself, right? So that makes the concentrator a little bit more complex than what is intuitive right now. But eventually this will be up to a vote and the decision of all the big brains of concentrator, right? So I think now that the strategy itself is intuitive enough, and the product developer, the product manager of concentrator is very kind to offering all those zap functions. Let's say if you clicked on deposit, you don't have to deposit the LP tokens, but any one of those the components of the LP tokens that you can actually you can choose, and then the concentrator will help you to zap those underlying tokens into the LP tokens and deposit back to the convex strategy. Okay, so like option strategy is definitely more complex. It's not as easy as what people can offer here with a zap button, right? Because you have to choose strike, you may have to choose expiration date. So it's definitely more buttons here. So that makes things more complicated for like newcomers or ordinary users, right? But still, who knows? Things could happen, but probably in a professional Zoom, right? Like what Coinbase call themselves, Coinbase Pro, right? So we may have a concentrator pro. Let's see. But very good question. Thanks for raising that up. Thanks.
Okay, thank you.
Okay, any more questions before we move on? Okay, nope. Okay. Kruger, can you open the Twitter of concentrator itself, which I think they have a very good thread of explaining the IFO. I'd like to start there. We can go to the Twitter of concentrator itself. In concentrator, yeah, yep. Let's see if they have the article. I believe they have the article, not this one. The article of concentrator IFO.
Stand by. That one's going to be buried. It's a ways down.
Oh, buried. Okay. Maybe I think on concentrator website, do they have a kind of a manual book that we can link directly to? FAQs, IFO FAQ. We can click on that one. Yeah, FAFO. Okay. Do we have a pie chart like to in oh okay.
Okay. Stand by. I'll pull the link for you from the launch article.
Yeah.
All right.
All right, there we go. Okay, so firstly, I'd like to kind of talk about a little bit about the token distribution. So we know the rough numbers, the big numbers on top of our head, and then we can go to details how they actually have this unfolds. Okay, so in total there are only 5 million CTR tokens for concentrator protocol. Okay, 5 million CTRs. And half of that CTR tokens are distributed in this IFO process. Okay, you see the pie chart, right? 50% IFO vaults. And there's also like 3% like liquidity mining, where people, you are generally offering, like they call it like liquidity mining. Okay, liquidity mining in Balancer, that's another 3%. So basically that's 53% that you got in this IFO process. And because this product is built by AladdinDAO's big brains and also the money raised for AladdinDAO. So AladdinDAO is having a 30% of the concentrator tokens, which will be distributed to AladdinDAO token holders and contributors. Okay. And also there will be like airdrops for early adopters, community boosters for all the contributors that have been talked about and spreading out like the news of concentrators. Okay, so so that's kind of the rough allocation of the concentrator itself. Okay, so remember the token, there will be only 5 million of it. Okay, and the distribution, the most of the distribution happens in this IFO process. So how does this IFO process looks like, right? So we all know IDOs that we can go back to the probably the FAQ of concentrator IFO. Let's go back to that one so people can look at it while I explain it. Okay, we'll go back to question 1 probably. Okay, so you can look at it, but I'll definitely explain it in plain words, try my best. Okay, so in the old days, people use IDOs, like IBOs, all kinds of IXO offering, right? So that where you give the project your money and in exchange for the protocol's monies, right? And you are basically investing into these protocols. That the thing could be there's a lot of drawbacks, right? So sometimes the protocols basically get money and run away. We call it rug, right? And sometimes it's basically when the project owner deploy the pools, and those like we call it scientists, they are the first time they use MEVs to go first in the pool to get the tokens and dump on latecomers who really believe in and love the protocols, right? And then people kind of suffer a lot in the secondary trading parts just in the very beginning of the allocation, right? So those are all the bad memories I have during all the IXO offering process. Okay, so this in IFO thing, which is to me a very novel and innovative way that they distributed their tokens. Okay, it's distributing their tokens to the real users of the protocols. Okay, how is that? So as we remember, in the normal times, the concentrator is reinvest your tokens into CVX CRV tokens, right? CVX CRV token is deposited back into convex protocols again, right? You are and they use ACRV tokens to represent it that. Okay, so you are basically farming ACRV tokens. And then during this IFO process, the way is you're not getting your ACRV tokens if you choose to go for IFOs. So all the ACRV tokens that you have been accumulated in the process of using concentrator, the ACRV that being harvested by you are automatically exchanged to CTR as a 1-to-1 ratio. Okay. So that's the boost we got in the third layer of why, like concentrator is getting better yield than wire now. Okay, so you're basically getting 1-to-1 ratios in for that 50% part of the pie chart. Okay, so that's the main way that you can get CTR tokens, right? So basically the farming like emission schedule is uncertain. It actually depends on how many people choose to use concentrators, right? So as concentrator is earning ACRV tokens, the more it's earned, the faster it earned, the IFO process will end sooner. Okay, and the more people, the more like TVL, or the more money that the higher APR like pools that farmers choose to deposit, the more CTR tokens they can get, right? So that's kind of the beauty thing of this distributing process, that farmers are getting tokens instead of the speculators. The users are getting the CTR tokens instead of scientists, right? They kind of pop and dump, right? And also like this process is basically is a way of fair distribution, right? And also it doesn't come at zero cost. The protocol itself is getting ACRV tokens. And also, like, people say, okay, so where do they use these ACRV tokens when the protocol collects it? They are not used for Lamborghini or Yachi that 3Arrow has done for for themselves, right? It actually cross-chain all the ACRV to other chains, that's Curve protocols that deploy it on other chains, and to add a pool of ACRV against CRV itself. Because like Curve protocols allow people to farm Curve tokens on other chains like Arbitrum, Polygons, maybe like Avalanche, etc. Right? And the Curve tokens people got there, they have to cross chain back to Ethereum to get and then like lock them in either Convex or Curve itself to get tokens, right? Because the governance the governance modules are only happen on Ethereum, right? However, if people they only getting small lots of Curve tokens and they want to get Curve yield, what they can do? They can basically exchange their Curve tokens for ACRV tokens on the Curve on other chains, right? So that's actually a sweetener for Curve token holders. But if they are like small ticket size token holders, they can get ACRV token, which is itself is a CVX CRV token compounder. Okay, so that's the most of the capital raised is through this IFO will be used for that purpose. Okay, and in the meantime, the other way that people can get for the CTR tokens is they launch a balancer pool, which is the pool weight is 98% of ACRV tokens against 2% of CTR tokens, right? And then you can deposit into this balancer LP and farm the 3% of the CTR token. Still, the emission time frame is uncertain. It happens until half of the CTR tokens are fully distributed, means that the protocol has to earn 2.5 million ACRV, and then the IFO process will end. Okay, so yeah, so that's how basically it works. And then in the balancer pool, the 98 to 2 like ratios will make a very small impairment loss for like the farmers, right? Because most of the weight size is tilted towards ACRV itself, right? So it doesn't matter CDR, like even CDR varies a lot in the farming process. The LP farmers won't have too much impairment loss. And after the IFO ended, this balancer pool will move to Curve itself, right? And then like people will not have to bear the the bad UI that the balancer is offering right now. Okay. Yeah. So that's how the IFO itself is happening. And right now, if you want to have CTRs, the third way definitely you can go to balancer and swap for CTRs, but that's not the way I suggest, because you're not well, I don't think it's a good thing to speculate on the token price of CTR itself. It's better actually to farm by using the protocol, right? And if you want to go riskier, definitely offer liquidity for CTR tokens is another way, right? Simply speculating on CTR itself is not great. But also I would like to give us more analysis of whether it's valuable to get like your ACRV in exchange for CTR tokens right now, right? So there are only 5 million CTR tokens, and if we anchor the value of CTR tokens itself to ACRV. So ACRV right now is basically traded at, can we go back to concentrator? We can check out the ratios of ACRV against CRV. Roll down. We can go to, okay, so the current index is 1.15, okay, 1.14. So one ACRV is 1.15 CRV, which is actually CVX CRV. It's not CRV, CVX CRV, okay? So we can use a calculator. So 1.14 times, let's see the CVX CRV, what's the exchange rate? Can we go to curve to check it out? CVX CRV against curve. CVX CRV. That's right. Okay, it's 1.26 times 1.26. That give you 1.43 times 5 million. That give you 7.2 million for the valuation itself. So with the protocol that TVL has surpassed, like one, like I believe it's $1 million. No, $100 million. Go up. Let's see the total. Yes, it's almost with the original vaults. I think it passed. With the original vaults together, I think it passed like $100 million, right? So you are having a like $7 million valuation for a protocol which now has a TVL of $100 million. Okay. So I don't think the valuation is off the charts, which I believe still in a very reasonable range, and that's still a fully diluted right valuation, right? Well, of course, because like once the IFO ended, there will be no more emission of CTR tokens, right? So very soon it will become the most of the CTR tokens will be float. But even all the tokens are float, it's now traded at a $7 million valuation of a very top DeFi protocols, and the TVL is still picking up. So I would say it's reasonable to me. It looks good to me, right? I would bet on itself, but I would not speculate, buy a lot of tokens. I believe it's better for the token distribution to be more even across the users, and to be there, the more holders will be the better, right? So I don't encourage speculation, okay? But still, the valuation looks reasonable to me. And the valuation that what we can compare, okay, let's see what the concentrator could become, right? If I use Wiren as a benchmark that I compare today, so we can check. Let's go to CoinGecko to check the YFI valuation. How much YFI worth? Well, YFI is a full float like token. Okay, so YFI now the market cap is how much? Okay, $200 million. $232 million. So that's basically 30 times what is compared to like what concentrator is traded at, and the full value lock is $600 million, which is only 6 times, right? So in terms of like, if I know people are using ratios trying to build like valuation framework for DeFi protocols, one of them is total market cap against TVL, right? Even from this perspective, concentrator is definitely trading at much healthier ratios than what Wiren is doing, right? So 30-1 against 6-1, right? So basically the concentrator ratio in terms of TVL against market cap is 5 times better than what wiring is. And if you look at the trend, that concentrator is definitely picking up in terms of TVL growth. Its trajectory is upward, while wiring, like AC leaving the protocol. I don't know who is the soul of wiring, and the TVL itself is dropping. And I don't see much innovation coming through, right? And also the principle, right? Farm and dump, I believe, is not a cool thing that will last in the long term, because this is detrimental to all the DeFi protocols in the ecosystem. While buy and hold is benefiting everybody. Okay. So yeah, so that's why I have a strong argument to say, concentrators token still trading at a reasonable valuation, and I would love to exchange my A curve tokens for CTR tokens, and definitely love to hold it through a long-term vision. As I see more farmers will migrate from wire to concentrator, and more newcomers will use concentrator as a way to increase the returns of their cryptos as they hold through this bear market. Okay. Yeah, let me check what else I haven't covered. Let me check. I have put down some notes here. Let me see. Oh, yes. What like all the DeFi protocols that issue tokens, we will have to explain what their tokens can get in return, right? It shouldn't be just a token for governance like Uni. That makes people at very confused about their tokens, right? If I only use Uni for governance and not getting any returns for the tokens, I see. I think I don't know, with the CEO of somebody in the Uni community raised a question that whether they can switch on the fee charging buttons now, kind of incur some discussion there. But I believe the project team shouldn't leave this question to the community and let people fight against each other. That's not smart. So the AladdinDAO team decide that 50% of the revenues will be allocated to the CTR token holders, as CTR token holders lock their CTR tokens into this V model. Okay, we like VCRV did for their token holders, right? So this will be beneficial for CTR token performance itself, and also for the token believers who would like to enjoy the long-term revenues that concentrator protocol brings. Can we go to the concentrator FAQs so we can look at how concentrator is going to generate revenues from the whole protocols? The FAQ of concentrator. Yes, click on this one. Okay, goes down about like the fee part. Let's see if we can find the fee part. How much does it cost? Please refer to Gitbook. Let's click on the Gitbook. The Gitbook. The number 6 question. Yeah, Gitbook. Okay. CTR token economics. CTR token economics. On the left side, CTR token economics. That's cool. Go down. Oh, not this one. Sorry, my bad. I think IFO watts. Click on IFO watts. Go down. Let's see the. No, here we go. The fee. All right, here's the fee. So here we got the fee. So the main revenue income is from this treasury fee. Okay. So treasury fee, it says like 10%. So basically, it's getting the compounding. Remember, now the concentrator is compounding your farming fruits into the CVX CRV tokens and deposit it back to the convex, right? So it takes 10% of that compounding returns from you, and that 50% of this compounding return is going back to CTR token holders. Okay, so That's the beauty of like the revenue generating protocols, right? It's not giving you air tokens for governance. It's a revenue generating tokens, right? I can't remember how much revenue it's generated so far. Let me take a look. Okay, so the IFO kick off on July the 14th. So over like 330K ACRV has been farmed with a daily of like 24K ACRV farm on a daily basis, right? If you assuming this TVL stay at this levels, right? And then all this ACRV, the underlying is CVXCRV, right? And it's compounding. It's compounding, right? In the compounding pools, right? So we can see here. So all this CVXCRV as it's compounding in the vaults, the return itself will the 10% of the returns are given back to the are belongs to the protocol, and 50% of that is belong to this the CTR token holders. So so a quick calculation of that is, okay, so let's see the ACRV tokens, the APY is 23%, right? 23%, and let's assuming the more ACRV tokens it accumulates in the vaults, the more revenue it's generating from the protocols, right? So it's actually it depends on how much ACRV the protocols can accumulate. And right now it has received so far only half month has passed, so 330K ACRV has been generated. Okay, so let's see if it run for a year. That give you how much, like that's kind of, let me calculate real quick. Times 24. Okay, that's about 10 times 24. That give you 6,000 K. So that's 6 million. Roughly 7 to 8 million like ACRV tokens, and that's how it's compounding, right? So basically it's let's say it runs for a year, and that stay at that level, that you got 7 to 8 million CRV tokens, and like getting 20% of revenues, that give you another 1 to 2 million ACRV curve tokens, right? And 50% of that is the revenue on this year base after 1 year, right? So that's basically give you like 50K curve tokens of revenue for this protocol. I can't say like over long term how much ACRV it can accumulate in the protocol, but after a year you can model this out and kind of calculate the distribution of how much revenue this can get. But it is growing bigger and bigger. And also it varies as the TVL itself is changing, right? So there are many input factors here, but still I want to emphasize, the you are getting revenues even for 50K ACRV at let's see the curve trading at like $1.5, right? You are getting 75K revenues every year, and half of that belongs to the CTR token holders, right? So although it's more, but you're getting some. Let's say if we go for the optimistic case where like TVL is expanding, right, and then people are accumulating more ACRV here as the time goes by, and people are not withdrawing their ACRV out, and also the curve token itself is the price is going up. So think about that. So three fundamental factors that are driving CTR tokens price, right? So if all that goes in a bull market, what CTR should be traded, right? You tell me. I mean, too much factors to model here, but we can have a spreadsheet. We should have a financial analyst, a Wall Street financial analyst here to kind of analyze like DeFi protocols token going forward. But yeah, in the bull cycles, all these three factors taking into discount, I believe there's a good thing. Could happen for CTR tokens, but still the bear markets could last for long term. and TVL can shrink, right? CRV tokens price can go down, and people are withdrawing their ACRV away, right? So yeah, so that's kind of a negative loop that you don't want to have. But yeah, let's see how the things evolve. Still, like, this is not financial advice, BYOR, okay? Okay, now I'm open up for questions. I believe I cover all the important notes I put down in front of me. So yeah, open up for questions. Thanks.
Forgiven. I
Yeah,
think there are actually a few in the chat. Excuse me, the text chat as well.
The text chat. Sorry, what?
Yeah, the call channel. So Barwig asks, what is the increased risk that I take on for the increased?
Okay. What's the trade-off? What's the trade-off? Of course. Are you saying compared to, let me see your questions. Because I can't see, sorry, I don't see the.
If you go to the workshop on the left in Discord, the entry for workshop, and there's a little
open chat.
chat.
Yeah, yes. So the question is,
Barwig.
Barwick, what's the increase rate I take on for the increase rate? Okay, sure. Several risk, right? The risk, firstly, you are reinvest your farming fruits into curve tokens, right? Or CRV CVX tokens, which is a peg that Convex is maintaining. Convex is maintaining right now. So the main risk is the curve token price itself compared to the LP tokens value, right? Especially if your LP tokens are stable coins, right? Other like risky assets, I believe it has a correlation with like curve is correlated to ETH, which I later checked that curve actually has a better performance than ETH during this drawdown starting from May. Okay, so if you are using stable coins to farm, definitely you are bearing the risk of the entire risk market. But if you're using other LP tokens, I don't believe there are much bigger differences than like holding like CRV or holding other crypto LPs. It's not that big different, right? And the second risk is the peg that Convex is maintaining here, right? So like Convex is offering CVX incentives to maintain the peg of CVX CRV against CRV itself, right? Because like Convex lock all the curve tokens for 4 years straight. If Convex tokens, depreciate a lot, that they cannot even offer enough incentives for people to kind of provide liquidity for CVX CRV against CRV itself, the ACRV tokens can depreciate it also, right? So that's the second part of the risk you are taking. And also as like a concentrator expanding the blue chip DeFi tokens more than like curve tokens into other tokens, let's say Frax, let's say I don't know, SNX or AAVE that people would like to hold and compound in the future, you are bearing risk of those tokens also. Okay, so those two type of risks that I believe are the main risk that you are holding here in choosing concentrator than like Wiren, right? Farm and dump and farm and hold. What's your belief? You gotta choose, right? You gotta choose. Okay. Okay. Next question. A question about impact of if concentrator is indeed better in terms of fee and returns, the users will might. What if you Wiren Lawrence fears I'm concentrated by because the harvest Wiren harvest less frequently than concentrator. Okay. Frequency is definitely one of the things, like the reinvestment frequency, but also like the main difference is farm and dump and farm and hold, right? So here, like concentrator is saying, instead of a farm and dump all the harvest to fruit, I'm actually choosing one of the most promising DeFi tokens, in the system, which is a revenue generating, DeFi tokens, and also it's actually offering a very fundamental feature in the DeFi Legos. So that's what we choose and decided to hold and compound for the long term, right? And compared to what Wirearm is compounding whatever LP tokens that you deposit into Wirearms, right? So that basically kind of a compounding or maximize out what you believe for your LP risk, right? So that's the main differences that I see here, which I believe Curve tokens probably like CRV CVX tokens is one of the most stable revenue generating tokens in the DeFi systems, right? Other LP tokens really depends on let's say Curve wall itself. It varies from time to time, right? Well, C Curve convex system is much more stable than other strategies in the systems, right? So that's what I see from my perspective. It's not just the fee part, but the fee part definitely plays a very big part of the role in this game. Okay, but I believe this farm and hold choice, then the farm and dump choices is a turning point, is a tipping point for all the DeFi players in the future, because why all the DeFi tokens is lagging behind Ethereum itself. This phenomena self-explained because most of the farmers converted all their farming fruits back to Ether itself. So that's why they said fat protocols and the seeing apps, right? And I believe it's okay because most of this protocol tokens is AIR. That's why they theme protocols, because those AIR tokens are not generating revenues or external economies, right? However, some DeFi protocols has changed. They start to generating external economies. They start to generate trading fee income. They start to generate crypto income like ETH or other stable coins incomes, that which they can in return give back to the protocol token holder itself. So as this phenomena start to turn, we believe as OG DeFi players, we should choose to hold, right? Like what Berkshire has done in history for stocks, instead of pop and dump like stocks, right? Make it a trading game. Here we are making it an investment game. Okay. Okay. The next questions will be more time for product questions. Okay. Does make it for bribe VCRV tokens in any way or capacity? Oh, I think Charlene has answered that questions. Will bribe for ACR VCRV liquidity in the future, given given they can accumulate convex tokens, probably in other clever strategies, but maybe not in concentrator. Or they may use I think they have a vaults for treasury, right? They can use those CDR to incentivize that too, not to increase the yield on the vaults. I think, yeah, bribery is trying to maintaining ACRV and CRV a peg. So once you have that ACRV and CRV peg, you can actually creating a note market for ACRV tokens. Then you can leverage out, basically you're borrowing against that note for ACR for more ACRV, and hence your yield. But that's probably happened in another product called Clever, which I'm not gonna go for full details here today. Yeah, okay. Any other questions, or have I explained the questions in good details? If not, let me know.
Can you maybe expand a bit on the idea of bribing VCRV to holders to increase the yield of the actual vaults, not in order to maintain any peg or liquidity pool like that?
You mean for a bribe or ACRV CRV pool, right?
I mean bribe VCRV holders in order to actually increase the yield on the concentrator vaults.
Okay. Yeah, so like basically like the concentrator farmers, the vaults are getting ACRVs once the IFO ended, right? So that once the IFO ended, you're getting ACRV again. So ACRV itself, if it's actually getting a good pack against CRV, not a pack because it has an index, it's actually accruing more CVX CRV into underlying, right? But still, you're kind of having the same liquidity issues that CVX CRV that has, right? And concentrator join this game, it actually makes it a lesser burden for CVX CRV, right? The yield that you're getting better here is because like you're getting ACRV tokens. When you try to exit the strategy, if you let's say if you want to withdraw your ACRV back to CRV or CVX or even ETH, all these type of tokens, you definitely want to this liquidity to be at a deep pocket that you can exit at the definitely a smaller slippage, right? So that's that when the liquidity is going deeper and deeper, I believe even for whales coming in, right? That's not a big problems when they exit, right? So the returns will be more solid, right? As they are gaining ACRV instead of the underlying self, and ACRV is building deeper liquidity, right? And the other thing is once the liquidity of ACRV and CRV is solid and strong, right? And then like other products can build around ACRV itself. Just like they put this ACRV and CRV LP tokens in itself into a strategy of concentrators, right? And more people kind of deposited in. And it makes self is a positive feedback loop and enhance this pack, right? And make the whole system even healthier given this liquidity is becoming deeper. And then more farmers will come in, right? Otherwise, when everybody run for the hills, the deep hack could happen in a very short term, and the system, the robustness, and the confidence of the system could deteriorate, like what STTH has done in this bear market, right? So that's what I believe, increase the yield on the vaults, right? Because when people getting confidence, more people come, more TVL, and more frequent in reinvestment basis because the fees on Ether is definitely a flat fee. Well, more TVL means there's more incentive for people to incur that reinvestment button at a frequent basis, right? And more TVL are dependent on a confidence in the system itself, right? Which that's what I think, for ACRV, CRV. And also, if this liquidity becomes very strong, other strategies, at least concentrator strategy, can add one line of item there. Yeah, so that's my 2 cents. Thanks.
Thank you very much.
So if there's no further question, we will stop it here for today. So thank you so much for giving for the presentation and all the insights you have shared. So for people who have more questions, you can come to find us in AladdinDAO and the Concentrator Discord. And we'll see you in the Discord. Thank you, guys.
Thanks, everybody. Thanks for listening.
Okay,
Have a good
thank
one.
you.
Thanks. Bye.
Thanks for giving.
Thanks.
Thank you. Bye bye.
Thank you.